to surrender or cancel your LIC policy before maturity. In this video, we will understand LIC policy surrendering process in easy steps. Do you know what is a free look period? What is misselling? What is IRDA grievance procedure? What do you mean by surrendering the policy and what is the process to do so? Is it good to surrender your policy or continue it? You must watch this video till the end to find answers to all these questions. You might be someone who have already purchased this policy and wish to cancel it, or you might be considering to purchase it. If you have already purchased it and now you wish to cancel it, it may be due to the following reasons. Your financial condition has been affected and you are not able to afford the high premiums of this policy. You took the plan without understanding it, and now when you understand it, you feel it's not that beneficial. You blindly bought this policy on the advice of a close friend or relative. Or you have a better policy in mind offering you better returns. But the main reason for cancelling the policy is not understanding the plan in detail while purchasing it. So if you haven't purchased the policy, then my advice would be to understand the policy completely if it matches with your goals or not. To make your work easier, we review different insurance plans and upload those videos on our YouTube channel. You can check out there. Let's understand what is a free look period. If you have bought the policy and now let's suppose you are not satisfied with the policy. In this case, LIC allows you to cancel your policy during the free look period with 0 to minimal charges. The free look period is 15 days from the date policy is purchased. If you are dissatisfied with the terms and conditions, you can return the policy to the corporation within 15 days from the date of receipt of the policy bond. The corporation will terminate the policy and refund the premium deposited upon the receipt of the same. They may deduct the proportionate risk premium for base policy and riders, if any, for the period of cover, charges for medical examination, special reports, if any, and stamp duty charges. If in case the policy is purchased online or through telemarketing, the free look period is 30 days. Now let's understand what is misselling. Some insurance agents or brokers sell you insurance products by giving a wrong picture of the product. It may include giving wrong information, giving unrealistic information, or not giving full information about the product. So if you have been missold an LIC policy, then there is definitely a way out. LIC Life Insurance Company has proper procedures and effective mechanisms to address complaints and grievances of policyholders, including mis-selling by different intermediaries. Policyholders can personally contact the grievance redressal officers and seek redressal of their grievances. Now the question is, where do you find those grievance redressal officers? They are available at their offices for personal interviews with the customers on all Mondays between 2:30 p.m. to 4:30 p.m. Customers can meet the grievance redressal officers on the other days also with prior appointments. The names of these officers are displayed in the respective offices. Now, if the policyholder is not satisfied with the decision or resolution of the company, in this case, they may approach the Insurance Regulatory and Development Authority of India (IRDAI) of their state. Details related to this will be provided in the policy documents. The policyholder may approach the IRDA if insurance claims have been rejected or there has been delay in settlement of the claim, or you have dispute with regard to premium, etc. The address of the insurance ombudsman may be obtained from the link www.irdaindia.org.in. We have also provided you all other details like IRDA grievance toll-free number, email ID in the description section of this video. Remember, you can cancel the policy through IRDA grievance procedure only if you have been missold an policy. But what if you have not been missold a policy and also the free look period is already over? In that case, you can still surrender your policy based on the below conditions. The policy can be surrendered by the policyholder at any time during the policy term if it is paid with single premium option. But If it is paid under limited premium payment, then the policy can be surrendered if 2 years premium have been paid. What do you mean by surrendering a policy? When you opt out of a policy before its maturity, then it is called surrendering of the policy. And the amount that you receive at the time is the policy surrender value. Also, in case of surrender before 2 years, no surrender value is offered. How is LIC surrender value calculated? There is a formula to calculate the LIC surrender value. We have provided the same in the description section of this video. Payment in case of surrender. There are two types of surrenders available. Let's check them out. First is guaranteed surrender value and second is special surrender value. What is guaranteed surrender value? Under the guaranteed surrender value, the policyholder can surrender their policy only after completion of 3 years, which means that the premium has to be paid for a minimum period of 3 years. If you surrender after 3 years, the surrender value will be around 30% of the premium paid, excluding the premium paid in the first year and the premium paid towards accidental benefit. So the later the policy is surrendered, the higher will be the LIC surrender value. Before understanding special surrender value, we have to understand what is paid up value. When it comes to surrendering your policy, there is one more option that most of the policyholders are unaware of. That is converting your policy to paid up mode. When you convert your policy to paid up mode, you won't get all the money right away. Instead, you will get money when the policy matures. The benefit is that you can stop paying premiums and the insurance will continue to operate, but the sum assured will reduce proportionately. So, for example, suppose if you paid 30,000 on an annual basis, your policy term is of 20 years, but you have paid premium for 4 years for a sum assured of 6 lakhs. Then at the time of maturity, you will get a proportionate sum assured of 1.2 lakhs. This sum assured is called paid up value. Now let's understand special surrender value. It is usually higher than the guaranteed surrender value. The maturity sum assured will be calculated based on how much premiums have been paid. It is calculated as paid up value plus total bonus received into surrender value factor. So for example, as we saw before, your paid up value is 1.2 lakhs. The bonus accumulated is 60,000 and the surrender value factor in the fourth year is 30%. Then your special surrender value would be rupees 54,000. We recommend you consult your financial advisor before surrendering or cancelling your policy. They can assist you in making the best financial decision possible. In case you don't have a financial advisor or you don't trust your advisor, you can opt for a 30 minutes free financial planning consultation. The registration link is given in the description. Now let's come to the core topic of this video, that is how to surrender your LIC policy. You will be required to carry the following documents to the nearest LIC office at the time of surrendering of policy. Documents required for surrendering your policy are original policy bond documents, request for surrender value payment, LIC surrender form, LIC NEFT form, bank account details. You have to carry your original ID proof like Aadhaar card or PAN card or driving license, a cancelled check, and a letter to LIC stating the reason to discontinue. We have provided LIC surrender form in the description section. You can download it from there. So now the question is, should you surrender your policy or continue the policy? Now you might be in a confusion whether to sell the policy or retain it. It's obvious that if you surrender, you are going to lose money. But if you retain it, then also you will lose money. It's normal to lose money when you cancel. But by cancelling your policy, you can avoid further damage due to the time value of money. Also, you cannot expect more than 4 to 6% return on your investment in such policies in the long term, which cannot even beat the rising inflation. Also, you will miss out on better insurance and investment options like mutual funds and PPF. So take your decision wisely. To help you take wise decision, here are 4 things to remember whenever you buy an insurance plan. Our first point is a life insurance plan must aim to mitigate financial uncertainty for your family in case of an eventuality. Second point, as compared with other insurance plans, pure term insurance policies offer higher life cover at a relatively lower premium. Our third point is the investment can be done separately depending upon the corpus required, time horizon, and risk appetite. Our fourth and the most important point is keep your insurance and investment separate and make sure you fully comprehend the product before investing. These two simple tips will get you a long way. Now, if you have any further queries about surrendering your life policy, then please leave them in the comment section below. We also host regular live webinars on investment and personal finance. We'll be hosting one very soon. To register for it, please click on the link given in the description. Don't forget to like, share, and subscribe to this channel to keep getting updates on more such useful videos. That's it for today. Meet you soon. Bye bye.